From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Good afternoon, this is the COB, all the stuff you need to know about the day in markets. I'm Kyle Rodder with Danny Akiye, of course. Danny, second day, it looks like we might be in the red. How are we looking now?
Yeah, I'm getting the ASX 200 pretty much flat on the day, actually. I think the SIBO's down a little bit more.
Right.
But yeah, we had a little bit of momentum at the start of the day, and then it just went steadily south after that. And really, it tried to recover after the GDP and a bit of the China data, and then headed south again.
Yeah, it doesn't. Well, there's an absence of buys, one might say, out there at the moment.
Looking a bit wan.
Yes, down 0.32% there for the SIBO. And well, we will get the final trade going through the market in about 10 minutes' time in the ASX. But for the time being, well, flat at best, if not slightly lower. But let's push on, look at some of the themes that are driving the markets right now. And well, first and foremost, the Governor Lowe was speaking today, and well, that narrow path that we're trying to traverse. It's also a bumpy path, we were told as well. So we're getting a real picture being painted by the governor here, and well, it's probably not a good one.
Yeah, I listened to Question Time. I thought it was really interesting because he has he's cited a whole lot of things in terms of housing prices, obviously the Fair Work Commission, the inflation rate, but also to what he sees as inflation being sticky overseas. And I really sensed a panic is the wrong word, but just I am not going to be that governor that embeds inflation into the Australian economy. Yeah. And I think he went to some lengths to say, we need to do this, we need to do it now, and we're going to be data dependent going forward. Yeah,
sort of playing a little bit more tough guy now,
yeah,
I suppose.
Absolutely.
And well, there is that argument too that he might be kind of close to the end of his tenure, so perhaps doesn't want to be known as that guy that let the genie out of the bottle, a la the Arthur Burns analogy that everyone seems to pull up. But growth slows. That was an interesting one as well with the GDP figures. Not that market moving, obviously. It's backward looking, but consumer sort of weakening just a little bit. Consumer discretionary spending in particular, when you pick it apart. Savings ratio as well, dropping.
Yeah, down a lot.
Yeah, so people are spending more of their income on just, well, really probably the necessities. It sort of seems to be implied.
Absolutely, and it's only going to get worse because as we were discussing today with one of the guests, in terms of the percentage of your income that's going to be allocated towards mortgage payments, rentals, which is 70% of domestic economies, well, it's getting up to that 30% level, which really means, you just have to cut down on everything else. So I'm seeing comparisons in data to 2008 and 2011 popping up a lot. So, well.
Were you in Australia in 2008?
Certainly was.
Yeah.
Yes.
I was in high school. Anyway, China trade. Let's talk about that very briefly because that was also weaker than expected, and that's often a bit of a kind
exports
of
were
exports
weaker,
down 7.5%. Yeah. I think imports were down marginally, but I think
not as bad as expected.
Yeah. Well, and much less than exports too. So the US dollar figure was I think 65 billion. The expectations was for about 95. Correct. So a pretty significant drop. And again, that's sort of more
the trade surplus,
an indicator of weaker growth conditions more broadly. China being the factory of the world, as the cliche goes. So that was also fairly negative. Might set up an interesting tone for global, for the European Open, of course. Let's quickly just crisscross a few sectors though, shall we? Because the retailers bounced today.
They did.
Mostly, led by the likes of JB Hi-Fi and Harvey Norman. They were off pretty considerably yesterday, more than 2% as far as consumer discretionary.
And
so
also, I've got Lottery Corp here, went for a bit of a run as well. That's up about 1.4%.
Interesting, okay.
Yeah. And IDP, interesting, that's in discretionary, consumer discretionary.
Yeah, crawling its way back. Let's go, baby. But ASX, all tech now, also seeing a little bit of a rebound. Zero back above $112 per share. WiseTech Global not quite reclaiming that record highs, but it's still hovering around those levels. I think it was above 77 actually the other day. You probably know better than me.
I'm just trying to have a look.
Yeah. Well, a bit of a tech theme
looking pretty much up there, thereabouts.
Yeah, looking pretty solid.
slightly below the 52-week high of 77.46.
There you go. And energy, last but not least, in terms of the sectors that we are looking at today, and broadly weaker. Beach Energy as well. That story there was actually related to an an exploration project that it has in Western Australia, if I'm not mistaken, wasn't able to find what they were looking for. And I'm not trying to quote you two there. That was just, obviously their job. But looking for I guess, gas reserve or what have you, and wasn't successful. So I think investors weren't too pleased about that. So that's some of the corporate news, the sectors. More corporate news today. Viva Energy as well flagged a loss of up to $35 million per month following a contract crane accident. And that damaged machine. No, certainly not. So that was some of the big corporate news today. It was a little bit light on the corporate front, but the big one was
PolyNovo.
PolyNovo, yeah, it flew today. It was up, I think, 16% by the end of the session. Wow,
yeah, it did have a really good run with some very good sales numbers there. But I think, are we going to go to stock of the day?
I think we will. We actually had Carl Kapelingua from Think Markets as well as Michael Wayne from Medallion Financial. They were with Andrew today talking about, well, the investment case for PolyNovo.
You like growth and the market does like growth, then it's one you could look at. So I like the business. I like the valuation. I think the valuation's reasonable for the growth that's in the business. And then the third place I go is to the chart. And I say, well, if I get the first two ticks and the chart is showing a nice uptrend, which means that it's not just me that's seeing the benefit of owning this company, the rest of the market is, then I'm happy to buy it. I'm not seeing it. And that's where this one falls down. So we've still got short-term, long-term downtrends. The price action predominantly lower peaks, lower troughs. We don't want to see those falling peaks and troughs. It means that there's more supply in the system than demand. And this could have been a case of sort of buy the rumour as they were getting closer to launching in all those big geographic regions and selling the fact.
The company is very good at keeping the market updated. As an investor, it's somewhat difficult to decipher what's actually meaningful sometimes and what's just being put out there to generate interest. But every month at the moment, the sales momentum and sales growth numbers are very, very good. This month it's breaching the $7 million level. Last month it was breaching the $6 million level. So they're continually updating the market, and there's no doubt the momentum in those sales numbers is very strong, looking to become profitable in FY24. So even for your more risk-averse investors, I'm not saying for your totally risk-averse investors, but even for your more risk-averse investors, it's sometimes good to see that pathway to profitability. It is in touching distance. So for us at the moment, we're happy to hold it. We're not jumping up and buying it, but it is one that we have traded a lot in the past.
Okay, happy to hold it there.
Happy hold.
Happy hold, and Carl's just waiting for the crowd to catch on as well, so he can play that momentum naturally as the way that he likes to play the markets. But well, let's get a third opinion on PolyNovo, shall we? And we'll do that with our guest, Mark Gardner from Macro Capital. Mark, PolyNovo, do you like it? Do you hold it? What's your view?
We've held this a number of times over the last 12 to 18 months, probably more the last 12 months. We essentially started buying in when David Williams, the CEO, started buying when it was around about $1 in the midst of all the turmoil this time last year. And look, it's not one for the faint-hearted. Up 16%. Look, it's not really that big of a move in the scheme of things, to be honest.
It's come from like 265.
Yeah, so
wow.
It tends to follow a pretty solid pattern where it's great on announcements, and it will have, it can have significant rallies, and then once the buzz fizzes out of the stock, and it just tends to drift off on light volume. So it was one that we've been buying over the last couple of weeks. We're much more of a defensive mindset, but obviously with the Nasdaq lingering in up here at the moment, we're just looking for some of these shorter term plays. PolyNovo is one that's been very good to us. We were out of it above $2.50, earlier in the year, and it's one of those ones where you don't want to catch the falling knife. So we've been happily sort of wading back in, in very small volume. It's not something you want to be trading or well, a lot of our, particularly our surgeon clients, will hold a core position in it always. But for the rest of us mere mortals, we just we tend to be a little bit in and out because we're not probably as emotionally tied to the product. They seem to have an extraordinarily high opinion of it, and the company's been executing quite well. They were ready to go basically pre-COVID. And then their salespeople got locked out of, so they'd done all the hard work, and they got locked out of hospitals for about 2.5 years. So, and this is basically all of the, as soon as their salespeople were allowed back into hospitals, it's gone it's gone gangbusters, and a 7 million was a record sales month. They're expanding into Asia. They're expanding and got really quick regulatory approval in some of the Asian countries and Europe as well. And they've got a new product out there that sort of expands their addressable market as well. But from a long term perspective, I think this will be happily above $3 in within the next 18 months or so. They just need to keep chipping away and executing and expanding. So it's just not really that. There's some of those stocks out there at the moment outside the AI hype. If you're a growth stock, you really and you're going down that growth path and expanding and going into new markets. When you spend money, you tend to get a little bit punished and obviously, they are converting at the moment. So yeah, and there's and another one in that space as well is that Neuron Pharmaceuticals. I think a couple of hours ago or an hour or so ago, they got their first $40 million royalty payment on their debut drug, which is the trofinetide for Rett syndrome, which is the only...
Oh, Tourette's, did you say?
No, Rett syndrome.
Rett.
It's a neurological disorder.
Oh, right.
And it's the only drug available on the market that treats it. So it's been a long path for them, but they've finally triggered their royalty payments, etc. Had a pretty significant spike and drifted off, back towards the bottom of the range in the last couple of days. But I think seeing that cash come in is going to really, really give some investors some confidence. And I think there's at least around about the 350 million mark in royalties coming in. They hope to apply it to other forms of neurological disorders. And they've also got another drug that they're developing, which has got a sort of long, unsexy serial number for a name. They haven't quite got the marketing department onto that one yet, but which is if they manage to commercialise, it's got a 5 times larger addressable market. So yeah, so two really good Australian biotech companies that really are not going to be affected by a recession, basically. So the PolyNovo skin graft is apparently best in class, according to the doctors I speak to. So there generally has been talk that there is comparable products out there, but talking to the guys that use it, they say it is by far and away the best in the market. So so they're not bad little plays.
I was just having a look here, and Neuron Pharmaceuticals has had quite a good run, whereas PolyNovo, as you said, went off a cliff and had a bit of a rally. Do you have a preference at the moment?
I think PolyNovo has the tendency to go on a quick run, and we do have CPI, we do have FOMC next week. I mean, you may get a fairly nice little result out of PolyNovo. Maybe even one broker upgrades over the next few days. Even it is that kind of stock. So. We'll probably if it gets a run on up to around the $2 mark, and it's only midweek next week, well, we'll probably definitely be looking at trimming some out because but we do like it long term. We like both long term, and they're probably only 1 to 2% allocations to your portfolio. They're not they're not keystone holdings overall. So and they you do tend to get in these littlest companies. I mean, Neuron Pharmaceuticals not little; it's over $1 billion. But you do tend to get another opportunity when there's broader market weakness at certain stages.
Let's shift to just the US market, because you did talk about obviously what we've got coming up in the next week or so as far as event risk. But a lot of the talk at the moment is the fact that we've got this tech-led rally, a lot of that sort of AI related. The Nasdaq's probably slowed its upward momentum in the last few days, but I can tell you, me for one, very tempted just to short it on the fact that there's hype there around the kind of AI theme, but how do you see? Well, that's exactly. I know, probably stupid as well.
It's very sensible.
Well, you go and tell us your.
Tell us all the other shorters that have been wiped out.
Look, I mean, I'm one of them, not wiped out necessarily, but. Look, even the most optimistic growth forecast for AI are around about the 3.7 trillion by 2030. So this rally in these big 7 mega caps is at 3.6 trillion. So we're basically there already, and we haven't even started. The EU is really the only ones who have started trying to tighten regulation around this. A lot of the applications being touted are, if you go back and look at historical examples, will be absolutely nowhere near the time frame. Quite a lot. There's a PwC report on it, and quite a few, at least half of that they're saying that they might achieve by 2030. is realistically would have to have just zero regulation. So the market's already there overall. We've got all of those companies trading at 20-month highs in PE, and we're coming into the broad, like a looming recession, higher interest rates, etc. I don't disagree with probably playing the AI thematic in those big FANG stocks. Don't get me wrong, because they're very cashed up. They're going to be a lot safer leading into a recession because you definitely know they're going to survive, and it probably is a massive advantage to them being cashed up, being able to probably pick off the best in class developers of the AI technology. But I mean, people are saying whether they've missed the boat. Well, the boat hasn't even been built yet. So I think I'm not saying I'm against the investment thesis. I think that 3.7 trillion will probably grow over a period of time. But I even asked ChatGPT what the growth, the addressable market expectations were, and they were on the low side at like 1.7 trillion, so half of what PwC was saying. So it is a rally that is 3 standard deviations, which means it's about 0.25% chance the last month's rally of happening. Only 8 times in the last 40 years has a rally of that extent happened. So it's basically no chance of happening again. So yeah, I'm pretty happy to be in SNAS at the moment, which is the short Nasdaq ETF, particularly as a hedge against the broader market, because I think a lot of the value stocks have fallen away because people have gone and rushed into these stocks. Yeah, and you're also, one thing as well, you're getting over 5-to-1 leverage on most of the platforms in the US to hold those stocks. So that leverage game of musical chairs, that when the music stops, you better hope you can find a bid or a chair to get back out again. So it could quite easily come back down a good, the 10 or 12% that it's basically rallied in the last 5 weeks. So because there is no imminent revenue from any of this stuff. There is a lot of imminent costs, a lot of imminent costs. So I think there's been, self-driving cars are a great example. 2013 was the first time they legalised a self-driving car. Ford's pumped billions and billions of dollars into it, as has just about every other car maker. We're still 3 years away from a chance of self-driving cars being allowed to be fully automated on the road. So I think whilst I agree with the investment thesis long term, just definitely not at these prices. It's very overhyped.
Oh, indeed. I've just I know we have to wrap up, but I'm just looking at an interesting chart here that someone tweeted today, and it's actually been the ETFs, but individuals buying through the whole way, whereas if you look at institutional money flows from May 31, 2022 to May 31, 23, it's just gone off a cliff.
They've been the ones getting murdered on the short side.
Yeah, exactly. So it literally has been like all those younger investors, probably by the dip, have been really in there. So it'll be interesting to see whether
pretty
they
similar charts to some of the meme stocks.
Yeah,
to be honest.
Exactly.
Which is pretty frightening for how big these companies are. So.
Fantastic.
Yeah. Mark, really appreciate your insights as always. Mark Garner, Macro Capital. Thanks for your time. Okay, well, let's get to the leaders and laggards, shall we? Okay, let's kick off with the leaders, and I feel it's Polynovo is probably still at the top of the pack,
It is.
And indeed it is. It's up 15.6% for the session in the end. Block up 4.5% is the second there. That seems to be something of a crypto story too. I've been digging into some of the goss. It's almost tabloid journalism, tabloid finance journalism around CZ, the CEO, managing director of Binance, and all the funny business.
Well, because they're getting pinged, the block's going up.
Well, no, it's a crypto play, but it's we had a
Oh,
sell-off
I
in crypto
see.
and then it bounced a
Yeah.
little bit. But there's all the
Okay.
speculation about all the naughty things that he could have been up to, client money, buying yachts, all sorts of dodgy business. Anyway, there's
Right.
some typical day in crypto markets, basically. Lots of salacious things going on. IDP Education, let's go, baby, up 3.75%, clawing its way back after, obviously, that
Absolutely.
significant sell-off we saw it was last week or week before, and who knows, time
Yeah,
flies.
probably well overdone.
I would have thought so. Reliance Worldwide too is down at 2.63%. Up 2.63%. Sorry, it's been a long day. Anyway, let's have a look at the laggards now, see where we're sitting there. And Beach Energy covered that off before, just in terms of, again, Was looking for something, couldn't find it. Investors are disappointed about it. A2 Milk, though, I don't know if there's necessarily any news around that, but
they ran up yesterday, didn't they, on their announcement?
They did, but less than from what they've sold off today. So I mean, it could be just noise.
Traders.
Yes, exactly. But down 4.2%. Korean Energy also off. Inzitec Pivot down by 4%. Sandfire Resources too off by 3.6%. Consumer discretionary rebounding yesterday, but still down over the last 2 days, especially as we're getting to these sort of consistent bad news stories around the Australian consumer and updates from obviously a variety of companies. It's warning of the outlook for their sales and earnings going forward. Anything? I'm just trying to see if there's anything else that really jumps out there. It looks like the ASX 200 will close down by about 0.16%, mind you. Just as we run through it.
0.16%, and really, just we had buying in terms of. Let's just have a quick look in terms of the sectors that actually did manage to go up, and I think we've pretty much covered them. Consumer discretionary, information technology, utilities finding a bit of love.
Telcos, healthcare, a bit defensive, we can call it that, I think. Anyway, that's the laggards there. Well, onto the small caps, of course.
What surprises are in store here?
Out of that? Novonix, that's another health tech name, isn't it?
Yep, I think so. I don't follow that one.
No, sorry. Too far down the list there, even for little old me.
Appen continues to run. It's amazing, isn't it? I mean, that you couldn't give that stock away.
No.
They have an issue, raise some money, attach the AI tag to it, and before you know it, it's off to the proverbial races.
That's got another capital raise written all over it, doesn't it? It's like, oh, geez, $4. Let's take that again. Anyway, Paradigm Bio, Latin Resources. Let's go to the laggards of the small caps today. Anything we can get there. Baby Bunting still down another 9%. That extends it to about a 25% drop, I think, maybe a little bit more than that.
At least,
over the last 2 days. That was a brutal
downgrade. Absolutely.
That's half.
And that
half
is
your sales
correct.
gone.
Pacific Edge is down. I've got it down 73% here. I don't know what happened there.
Cut in half. No, nothing can see on the news. No.
Yeah, no. Medicare coverage of CX bladder expected to cease.
No.
So yes, that doesn't look like a good outcome for that company if Medicare is going to stop covering their product.
Yeah, a cancer diagnostics
and Adairs,
company.
look at that, Adairs. I think there's some problems. I think people are concerned about their debt covenants.
Right.
So of course now you're going to start to see with some of these companies, if they go into this cycle with too much debt, what is going to happen, because I was
going to say, no one's had to talk about interest rate coverage ratios for a really long time, but businesses have to relearn the concept, right?
Exactly. They're one of my favourites.
As a ratio?
Well, just generally, I love, giving companies a hard time when they get themselves in a pickle over debt.
Especially the zombies.
Goes back to Goodman Field or Watty when they were taking over Ranks over Smicdougall, but that's another story for another day.
Yeah, we'll leave that for another day, shall we? Let's quickly just see what's going to be on tomorrow, or tonight at the very least. Well, I know Nadine Blaney will be setting her alarm for, perhaps midnight tonight when the Bank of Canada decides policy. A little bit of an RBA story here, similar to an RBA story. Not expecting a move, but...
Their house prices have also been firm, which I know has been upsetting some of the economists over there, and possibly the Bank of Canada as well. Yeah,
so a possibility it could hike again. US credit inventories as well is just something to keep an eye on, especially after that OPEC meeting on the weekend. I reckon that's
it for
probably
the day.
Enough of us for now. It was said that before, the ASX 200 is off by 0.16% for the session. The CBO was down about 0.3. Another negative day, but what can you say? With all this interest rate volatility, uncertainty, you can't blame the markets for being a bit edgy.
No, absolutely. That's it for us.
Yeah, we'll keep trying to walk that narrow path, walk the line, as a wise man once said. But remember, you can catch up on the news and interviews on our website and app. Otherwise, we'll see you tomorrow morning.
Bye.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.